Good morning, everybody. I wanted to take a quick second to hop on and highlight the 1 hour Nasdaq chart today. As a reminder, we have FOMC tomorrow afternoon and Apple on Thursday after close. We would expect that these two events would probably keep implied volatility elevated, as there's a bid underneath for protection that would cause a headwind against the general equity markets. Until those events are over to allow the IV to subside. For now, though, we are faced with a Nasdaq chart that is rather nice for upside expression. We have a ascending triangle you could see with 3 touches on the lower rail, and I've kind of highlighted this area as well as resistance with multiple touches into supply range. Some people will tell you that they have to be exact highs. I don't prescribe to the theory that all highs have to be the same. They're within a range. They show the same process of supply. And so this is my bar of resistance as supply. The general pathway and general math for an ascending triangle is that you take 75% of the range of the pattern and you add it to the breakout. So just to do that real quick, we see that this is 336 points of range. 336 at 75% is about 252 points. And so that's what we would expect from the breakout of the base, 252 points. That puts us almost up here into our red bar. And it also is a corrective process for this entire washout pattern that we had back earlier last week on the 25th, 26th. And then we started that bottoming process 27th through today. The volatility trigger for the Nasdaq QQQ ETF is sitting just at overnight highs. And so, again, just adding to the resistance within our red box here. As is supports, we do have the shortest term 61.8 basing us support here, 14.411, 55. A little bit of short-term structure that could be corrected down all the way into this large volume node and point of control. 14.320 to 14.348 is going to be S1 at trend. We would expect for a long side opportunity, if this is tested, to move back up to test vol trigger and potentially up and out. Again, the issue with assuming that we're going to get this type of range today is that that VIX is going to remain bid unless we see bonds do something or the dollar. It's going to be very difficult to make that entire expression. I would assume that we would look more for a breakout to maybe move into the 1% area if we do get breakout to 135, just to clean up that first leg. And then we may see that mean reversion back down until we get FOMC and some clarity seeking out of there. But for now, while these levels hold, this is setting up as a net bullish trade. Either off of one of these two supports or on the breakout and up of this pattern. As a reminder, above volatility trigger changes the methodology by which MNs and dealers have to hedge their own flows. And so a move above the volatility trigger is what brings us out of this negative feedback loop we've been in for what feels like the last couple of weeks. So I hope this helps your pathway for today and into tomorrow. I hope you have a great day, and I'll see you later. Thanks.